unfriendly for inquiries. I just saw that email. They said, your site's a little unfriendly for inquiries, so I'm just emailing you directly. What's not friendly about it? Hey, how you doing? We're friendly here. It's okay. I'm like, well, it's not friendly. It's a good thing. Welcome to the Closing Beat, everybody. Happy Tuesday already. Week's going by quick, is it not? I hope you're having a good day out there. We are financial advisors here at Jazz Wealth, and we have a new advisor working for us. And you know how we do things around here, right? So I'm going to show you a quick picture, and you tell me which person you think is the new advisor here at Jazz Wealth. You ready for this? I don't know. It might not be too obvious. That's all of us. We took a group picture here today, if you're ever curious. And in there somewhere, not the dog, is a new person. I wonder who the new person is. He's got a lot of work to do. We'll get him broken in no time. We got him a hoodie today. We said, what? Take that off, man. But that is Chris. He's our new advisor here. He has actually a lot of experience in the insurance side of things. So he's going to help us out, make sure all of our clients do not get ripped off and can, of course, get their dough straight. But that's one for the books there. We're going to have to keep that one for a while. We are laid back financial advisors here. We just being ourselves. While other advisors are playing checkers, we are playing chess. One in particular that I got to work on today. What if you have retirement income from overseas? How do you handle that with the IRS? Client's getting ready to, their wife is getting ready to retire, and they've got some money coming in from overseas from their retirement plans there. So we kind of walk through all of that, get that straightened out, make sure the IRS is happy with you because you don't want to make them mad. Let's talk about the S&P here today. It's just hinting at new record highs. You know what I mean? It's was sort of a quiet day all day, and actually you can see that if you look over here, just the range of the day. You know, I often talk about, and I show the candlesticks here, not because they're magic or anything special, because it gives you a better indication of what the action of the day was. If you were to just use a line chart, there's nothing wrong with that, but if you were to use it, you would just see the closing price to the closing price to the closing price. So you have no idea if the closing price difference is from here to here. You have no idea if the market whipped around, right? I like to see that sort of stuff. So today we got a very, very narrow range day. It was a choppy day, but actually you got yourself a little bit of a pop into the close. One of these does not look like the other. In fact, I'll say two of these don't look like the other. Let me stop on this for a second. This is every sector inside the S&P and its performance throughout the day. And this is just every 5 minutes. No, this is every 2 minutes, right? Just showing you what happened. And so as the day is progressing, you can see that there's no confluence, is that the word? There's no agreement. Some are wildly positive, some are negative for the day. They're not really doing a whole lot. They're very far apart. So there's no uniform decision-making going on in the stock market. Everything is spread apart like puppies in a room. And you get all the way down here into the very last couple minutes of the day. And look at what happened down here. Tech with more than 0.5% rally just out of nowhere there. Can you see any other ones? The blue one, consumer discretionary and financials. It's almost like those that need the market to show, or the index to show a higher return, know which sectors to buy in order to get the index to show positive. Because we flustered back and forth between positive and negative. But it took only those 2.5 sectors to get the market to go positive close, and we have a positive close on the records books, right? Really, really interesting. Remember that tech and consumer discretionary house the stocks that have a large weighting in the S&P, right? So those big names that you're very familiar with there. Now, another way to look at this is a bit of a lesson day because it was a choppy and quiet day, right? We could, try to make something of this and tell you and pretend like we know what's going on or whatever, but there's another way to look at this. We have an index that's moving higher, and I, sort of point out the Magnificent Seven or whatever they're calling them today, leading the way. And I use the analogy where I say, well, imagine if you're on a rowboat and you've got 50 people on a rowboat, 7 of them are incredibly strong and they're rowing like crazy, man. You could just sit back, have a beer, and just relax, right? However, what happens when those 7 get a little tired? We need everybody else to chip in. Well, another way to look at this that you can do yourself, if you're interested in this, you can track, plot, or graph, however you want, the number of stocks that are trading above the 50-day moving average. Again, this is not magic 8-ball type stuff. This is just data in the form of a visual Q, right? So we use the blue line. That's the 50-day moving average there. I just keep it the same on every chart so it's uniform. And well, if the market is trending above it, you would expect a lot of stocks, right? We're doing well, right? A rising tide lifts all boats, as they say. However, we see something a little bit different here. We actually see that there's a lot of stocks not trading above the 50-day. Take a look at it this way. So what we did is we just plotted the S&P in dark, right, in the background there, dark blue. And then in red, we're showing day by day the number of stocks that are above the 50-day or below. It's just a simple math formula. You just go, if the stock is greater than the 50-day moving average closing price, put it in this column. If it's less than, put it in this column. Look what's happening. There's so many stocks moving below the 50-day moving average while the market is going higher. How can that be, right? The stock market doing well, but we don't have the market participating. Well, we have the big, heavily weighted stocks doing their thing. So what we have now is a market going up with very limited participation, which is fine. It doesn't mean that the market's going to fall. It could be that these guys all of a sudden start participating. It could also be that those that are lifting the market take a break. But look, everybody else is they've already taken the break. So now the market could come down as well. I don't know the answer, which one happens. You can obviously see there are numerous areas where when the market was starting to, or we can look over here, when the number of stocks below the 50-day was starting to fall, they turned around and started participating, and that carried the stock market higher, right? Got broad participation. There are instances like this where you see that the broad participation dries up and the market eventually pulls back to keep up, or to sort of revert to the mean, I guess, if you want to say it that way. So all that to say, I like pointing out different ways to analyze really basic info about the market and go, yeah, I don't know. I don't know if this is the time to be 100% just swinging for the fences, right? You get too many things that look like that. Add to that all the layoff talk that we still had even today. All right, so a different way to look at it. Hopefully you learn something there. We've got the NASDAQ, of course, right near highs, hinting at making those new record highs. It's got less than 3% to go. It's going to open a little bit lower tomorrow, thanks to some earnings after hours there. Well, as of now, it is. You got the Dow, same thing. So it's a little bit of the same story here, just with less stocks to look at. Not everything in the Dow is rising. The higher price stocks, besides yesterday, the higher price stocks are actually helping out. That's fine as long as everybody else starts participating there as well. So a little bit of a lengthy way to talk about that, but hopefully that helped. All the action today, if you want to find broad, exciting, broad participation in the market, you're going to look at the Russell 2000. The Russell 2000 had the broadest amount of participation today. Small cap value, small cap growth, small cap index. It just meant that people didn't care what they invested in the small cap arena. They wanted all of it. All right, so it was a very broad index type buying there. Russell is still down about 3.5% year to date. It's the weakest index of all of them so far. And really, this recovery, rather quick recovery here so far in rates, which means rates went down a little bit, was the main driver there. Remember, we like, small caps preferably low rates, but they can survive in a high rate environment as long as it's a stable high rate environment. That's the prediction being made right now, is that rates will maybe not be lower sooner, but they will be stable. So that's the whole approach there. By the way, I'll point out, if you're a small cap investor and you're patiently waiting for your spot, you are doing what everybody else is doing. So don't feel bad about it there. If you look at the 6-month performance of the Russell 2000, it's flat. It hasn't done anything. If you look at the 1-year performance of the Russell 2000, it hasn't done anything. It's flat. It's right back where we've started. It's been up, it's been down, all that stuff. So understandably, that's what's going on there. I do want to point out your China stocks. We just happened to talk about that one yesterday. We won't go over the details of it, but more talks of stimulus there. Remember, the Chinese government is much different, and their nation is much different than us here in the United States. When there is talk of stimulus from the government, or shifting money from here to put it into the market, or bringing it from here back into individual stocks, that's going to help. I believe, I was looking through our portfolio today, every single Chinese stock that we own was higher on the day. But just to point out a few that were higher and the more popular ones, Alibaba, I don't know. People are trying to maybe Yeah, pick on the lows there. You got Toyota Motors. That's an earnings related play as well. So not all of this is from that there. They absolutely crushed earnings. And if you're curious, I did put together here. Now, this is partly because of the yen, but I don't know if you guys find this stuff fascinating. But gross margins for them, that's a 20-year high. Partly thanks to the yen, but still, we'll take whatever we can get. So Toyota Motors going, hey, we're making a ton of money on this stuff. Earnings across the board just crushes it. Really, really cool there. So I'd share that with you. That's a bit of a history of the gross margins for them. NetEase and basically all the other ones, all very much higher on the day thanks to that. Elsewhere in the markets, you got, we talked about bonds already. No need to go back there. Crude oil is a hot mess. I don't know what they're doing there. Gold just a touch higher, but same thing. It's very, very choppy in the short term. Remember, if you are a gold investor or someone who believes in that, gold is a fits and starts commodity. Fits and starts commodity, whereas oil is a trending commodity usually. So gold has its big moves, sucks everybody in, and then just goes quiet for a long time, does nothing. So careful there if you're looking at something like gold. Yeah, we covered all of that other stuff. We're good there. Our wine and wealth classes over the last couple of weeks, we have new tax laws that are passing very quickly. Surprisingly, they're able to agree on the new tax laws. Just piece of cake. No big deal. It's all good. Eric covered the 529s. Last week, I did the February financial focus, and we'll be doing another wine and wealth here this week. If you are playing Guess the Dow, I believe we have an update.
We do. Yeah, we do have an update today. I have it. We got Tammy, Brett, Jeff, Bristol, and Sam. That is your top 5 for today.
What the hell was that? You said, I have it.
I didn't have it, and you didn't tell me you were coming to me. I panicked. It was a whole thing.
Okay.
While I was reading Toby Keith jokes over here, ChatGPT was giving to me. I was going to do the cup flip like Eric does, but I put too much water in my cup. It was going to be a whole disaster. It's not a good joke. I don't know how Eric does it.
Okay.
So
well, nonetheless, a little tribute today with the Red Solo Cup, I see.
That's right.
All right. Well, a sad Guess the Dow leaderboard today, but not from the players. It's just the events of the day. All right. Oh boy, let's bring that back to positive quickly here. Let's see what we can do. All right, stocks in the news. So British Petroleum, you're going to see that one there. There's going to be a theme in the stocks in the news today. And remember, this goes back to the lessons where we talked about how do stocks perform best in different types of economic cycles? What do we want to see leadership do? Let's see if we can identify a theme. We are in a softening economy right now. Not weak. We passed the peak. We're now just, working our way back down, taking it a little easy. Things are still fine. But let's see if we can identify a theme. British Petroleum. So they had earnings. Everything was better there. Total sales a little bit weak there. They go, hey, we're going to buy back $1.75 billion worth of stock. Boop. All right. That's worth 6%. Moving on. There's a lot of them. DuPont now, not Dow, DuPont, absolutely slaughtered the other day. And hey, look at that. They come out with earnings here today. They reported it was better than expected. Really negative if you care. They lowered their guidance going forward, and it was by quite a bit. So a little bit sort of kind of sucked there. But they said, you know what? We're going to buy back $1 billion worth of our shares. Boop, 7%. All right. That's fine. Not buying back their shares, but Berkshire Hathaway buys more shares of Occidental Petroleum, and Berkshire Hathaway is buying back more of their shares. Boop. There you go. A little bit higher. All right. UBS, not a good earnings report there. I like looking at the financials. Put it this way. They missed by $1 billion. So this wasn't like, oh, yeah, we're a little bit off. I'm sorry. The times were tough. No, they missed by $1 billion. That was crazy. And they did not buy back shares. They said, we're talking about doing it maybe in the second half of the year. Uh-oh, right? You got it. You know what's going on there. You saw the theme, right? You got it? Hertz was in the news there as well. This was earnings related. It wasn't really a shocker. Remember a while back we talked about them getting rid of all the electric vehicles. That was all over the news and everything. That was already priced in by analysts there. They did miss on earnings. Obviously, there's a tremendous cost to earnings to getting rid of all these electric vehicles. So I'm going to say that people pretty much already determined whether they wanted to participate there or not. I think it was kind of more of a known issue. After hours, you got Chipotle beating on earnings. It's going to be up quite a bit tomorrow, 25.50, 25.60, somewhere in there. They beat on earnings because I've been eating there a lot more. I might even eat there today. Son of a gun. Look at that. Now I want Chipotle. Okay, let's see what else we got here. Tomorrow, earnings from CVS, Roblox, Yum Brands. Yum China is after hours, I believe it came out. Disney, Mattel. After hours, the focus is on Disney. It will also be on O'Reilly, PayPal, Uber, and Wynn Resorts. So, holy cow, all right? Got a lot going on there. Don't forget, if you want to learn about finance, investing, retirement, and all that stuff, and you are a younger person or know someone that's younger, check out Haley's channel, Dough Straight, on the old YouTubes there. Short, quick little tips. All right, let's take a look at your questions if you have any questions. Otherwise, I just go on doing what I do. Let's see here. I'm going to make this a little bit bigger there. I'd like to thank the team at Plantair for what they did and are about to do. Yeah, are you happy today? It's hard not to be happy with that one, right? Unless you're trading to the short side. Very nice. Yeah, new highs, earnings related. Very cool. Alibaba got tomorrow's stock earnings. Yeah, but they'll be out. It'll be real early in the morning when they come out there. So we'll see. You think China stocks have further downside or worth a deeper look? It's all going to be based on politics now. Their powers that be have said, yeah, we're going to have to support this market a little bit. We've got a problem with our currency and with the markets. And so I think, I don't like that personally. Will it do better? It'll probably do just fine, right? There's a lot of momentum behind that. The amount of volume that came in today, fine. Very exciting. Probably see some continuation of that. I just don't like starting to participate more when I can't rely on the growth of the company and investor sentiment. I don't like when one person in China can say something overnight and that can impact the whole market. Kind of like Fed Day over here. So for me, that's just not my cup of tea. You think rates will drop any before mid-June? They dropped a little today. I mean, they were up and then they dropped a little bit. You'll be closing on a house in June. Well, you kind of hope that this little rally continues in bond prices. You don't need the Fed to change your rates. Remember, the Fed, they're not talking about mortgage rates. It does trickle down, but you're not betting your house buying on the Fed. You're just watching the bond market, right? Hopefully more of what happened today continues for you. You're going to be adding, Tom says, oh man, this Albermill, man, I think this is really cool. Down at the lows, I like this stuff. You're going to go with the triple bottom. Technically, it's broken algorithmically. What I see out of this one here is no one was willing to sell. So I'm agreeing with you here that what would normally happen, just think of the emotion here. You own the stock somewhere along this way. You clearly have a loss, whoever does. Then you come down, you make the little double bottom, and the technical traders go, oh, for goodness sakes, thank God. And they see the rally, and they go, now I can recover and get back to my average price. It then falls all the way back. You're stressing about it, and it touches the same exact level. So the emotions are high again. Starts to bounce a little bit, and you go, oh, thank goodness. That's fine. Triple bottom, that's what it's going to be. And then it breaks through it. Now, normally, when you see a final breakthrough there's some level of commitment on the sell side. There's the throwing in of the towel. There's usually a big, swift move lower. That didn't happen. Isn't that interesting? There was no emotion where there normally is quite a bit of emotion. It's kind of like a breakout, just upside down, right? And so since there wasn't, now you know everyone who panicked or wanted to sell and take the loss, likely around the end of the year somewhere in this little gobbledygook, they did it. It's over. That explains why this had such an easy chance of going higher there. There's the lack of sellers is likely going to help you out there. So that's a long way of saying, man, I'm kind of with you on that one. Yeah. Forward after earnings there, they were quite positive about this year. I haven't had a chance to look into all the details, but the focus, if the stock is higher, is it? I saw all about guiding forward. Yeah, it is higher after. Well, it's higher for now. So I don't have all the answers for that one, just the basics that I saw. Had Microsoft finally lost momentum? I have gotten that question about this and all the other, the Magnificent Seven stocks and everything, just over the last couple days. Now, where do you determine that you've had enough profit? How do you determine you've had enough profit? There are numerous ways to do it, but this is the part that's supposed to be solved for ahead of time. At what point in this joyous run of profits will you say enough is enough? My percentage, my dollar gain, whatever it happens to be, I am happy with it, and whatever Microsoft does from here, so be it. I'm going to take my profit. People don't do that. That is a very, very important part of what's going on. You could use a trailing stop, the break of the moving averages, 5 down days, 3 days where it doesn't make a new high. Like, you can come up with all kinds of things there. But, you know, you know. I think Janet Yellen was being cautious because of what's happening with the New York City bank there. And the fact that they got a lot on their plates with their real estate transactions there. It's kind of impressive that one company can really do that much damage to a bank. It's not supposed to happen that way. But I didn't actually see how she commented on that. I caught some of the sound bites along the way. Kenny says, short to Qs, historically a weak month. Is it? Is it? Bohan, is there a correlation with interest rates going down or election year solar stocks going up after a horrible year? Those are two different things in my head. And we could do that. Yeah, we got the data on that one. So I don't know off the top of my head. We put something together. No problem. Here's a great example, actually, this before I go. You got Plantair, right? $6.39, he says, or she, is the average cost there. At what point does your beautiful profit, by the way, turn into a realized profit? What's your number, right? It's at $22 plus, or was it $22 at highs today? Beautiful trade. Now, how do you take the most out of it? Or do you sell some of it, scale out of a little bit of it? I mean, that's a monstrous move. Very, very well done. Nice, nice. Okay. If you're a 48-year-old and you are way behind on retirement savings, our Jazz After Dark last night was covering that one. Be sure to check that out if you'd like to. We're going to wrap it up there. I got to get back to work. Hope you have a great rest of your day or evening. And, adios. At Jazz Wealth, we treat you like family. That was going to be our slogan, but the employees here took it a little too seriously.
You bought what? That wasn't in the plan that I built for you.
Oh, quit crying.
Don't spend one more dollar.
I'm gonna start calling you Sylvester because you sound like a real...
Tú siempre estás llorando como un bebé, llorancito.
I'm not mad. I'm just disappointed. That's how you get your identity stolen.
We decided to go with let our family be your family's advisor.